welcome to the closing beat, everybody. Happy Friday. How you doing out there? Hope you're having a good day here so far. It's the end of a week. Welcome to the show. We're financial advisors here at Jazz Wealth. We just do this show every day to kind of update our customers as well as you guys that like to follow along how the markets are doing. And we'll go over it again today. We wrap up the week here with new highs. Before we get to that, we're playing a game. It's called Guess the Dow. Guess the Dow. We announce our winner every single Friday, and our customers as well as you guys, you can play. You go to jazzwealth.com/guess the Dow. Tell me where you think the Dow is going to close at the end of the week. And if you're closest without going over, we will send you a $100 gift card or credit your account $100. If you're one of our customers, you have the choice, of course, to do that if you'd like. And our winner this week, none other than Mr. Bruce S. He's one of our biggest supporters here on YouTube. He also happens to be a customer, and Bruce has been alerted that he was the winner. The Dow closing 2845509. Bruce guessed 28453.56. Within a couple points there, 2.5 points. Well done, Bruce. He's the winner there, and already sent out the email. We're going to credit his account $100. I thought was pretty interesting, by the way. There were only 11 guesses that were higher. So you guys all want the markets to pull back. I can tell your guesses are all lower, kind of median sort of pullback there. Let's take a look at what we got here. We'll go over to the stock market. Here's the S&P 500. Most of your guesses were below it. There were only 11 that were higher than where the Dow actually closed. We're looking at the S&P here, though, chilling at new record highs, closing out the week at record highs. Been an impressive couple weeks over the last 3 weeks. We're up over 3%, or just about 3%. And so looking pretty good there. We covered last night in our class for customers a sort of really geeky, all-out, data-filled class on going forward. You know, what to expect in the new year here, because we've said this all week. The year's basically over in terms of any real volume volatility or anything. Everybody's just pretty content. It's sort of an odd year where the Christmas holiday falls in the middle of the week and then the New Year's holiday falls in the middle of the next week. So you got a lot of people just sort of electing to take the next couple weeks off. Nonetheless, the market's just plowing higher slowly but surely. Got about average volume in there today. It was quadruple witching day, so we expected the volume to be a little bit higher than average, and basically was. And so that's where you have it. You got the S&P higher on the day in the middle of this clean little consistent uptrend here. You got the NASDAQ about almost a 0.5% higher. Same thing, just a clean consistent uptrend, a little bit overdone. Going to talk about that here in just a little bit. We'll share some stats and everything with you, but a little bit overdone there. And the Dow, of course, plugging along, looking good there. It's closed today, allowing Bruce to be our winner. I love it, man. That's awesome. We'll go over here in a minute, valuations, right? So a lot of times people look at the markets from a fundamental perspective. We look at like to look at the charts as well, just to have something to show you. But we'll go over here in just a little bit, the valuations of each individual sector and in the entire S&P to kind of give you an idea where we're at. I really want to highlight how we're just, we're getting a little bit stretched up there. If we go into the new year and happen to see a pullback, I know a lot of you would welcome that, but if we happen to see a pullback, then you'll at least have a little bit more clarity. But before we do that, let's do our sector breakdown here today. REITs continuing their little push-off lows there, fighting hard. We're kind of at the moment of truth. We've reached an area of resistance. If we zoom into the REITs today, you notice that everybody's looking at that same sort of ceiling in the short term. That's where we saw selling pressure all day, or at least buyers stopping their attempts at buying. So REITs had a good day today, although you just kind of want to say like this is a moment in time for the REITs here to kind of put up or shut up. If they're going to come out of this sort of short-term downtrend, then this is their opportunity, right? They're kind of the moment of truth there. Consumer staples were higher today, about 0.75%, continuing this nice little run after this sort of a little bit of a breakout there. Just a consistent move higher. A lot of our 52-week highs today fall in this category. We'll cover those a little bit later, but that looking pretty good. You got energy stuck back at the 200-day moving average. It's attempting to get through. I can draw it for you. It's attempting to get through this downtrend. So far, so good, but we're stuck at the 200-day moving average, so a lot of people looking at that saying, you know what, I'm not going to take my shot today. It was up 1%, but that was about as far as it could get considering the overhead sort of ceiling that's going through there. And the 200-day moving average, if you don't happen to pay attention to that red line, that 200-day moving average, you better pay attention to it because a lot of other people do. So that's what you got there. You have oil down on the day, pulling back here. Now, if you look at this sort of uptrend that we've drawn, we have this nice, clean little uptrend. We always talk about oil itself being a very technical product. So we've been mentioning the last couple of days getting a little bit towards the upper end of a range here. We've highlighted this range with these lines. We can get rid of this guy here, clean up a little bit. And now you have people as sort of, they're assuming that this is going to be the short-term high, and they're sort of betting on that pullback. Also, you have people taking profits in the short term. If this pulled back over the next couple days, you really wouldn't mind. Next week, the oil inventory numbers will be out later. They'll actually come out on Thursday, I believe, because of the holiday. So we'll keep track of that for you. Let's also take a look at gold. Gold's been in this tightening kind of a range here. Also, I would say a moment in time for gold. If I draw kind of what we got going on here, a little bit of a pitch thing going on there. We all can see the support area on the downside. So when gold falls a little bit, you notice how it's been sort of giving you those higher lows along the way, but we all see the same highs on the way up there. So whatever breaks first, you'd expect to see that move be the next sharpest move. And if the markets happen to pull back a little bit or there's any sort of fear in the markets, you'd expect to see gold pop up over those highs, maybe give you the next little boost to the upside. There's also a bit of a downtrend here that's coming towards an end as well if you follow from these equal highs. So I would say over the next 2 weeks here, you expect to see some excitement out of gold one way or the other. I'll leave these lines here. We'll check it out and see what happens. So you guys can see the technical side of things if you're not, or I know some of you are interested in the technical side of things, so we'll keep track of that for you. We had home builders back up towards the middle portion of the range, just trending sideways, marking time essentially, and you had semiconductors at new highs as well. A lot of the new 52-week highs today were also semiconductors. We'll cover those when we get there. That's basically your sector breakdown today. Let us move on to some individual stocks, because there were a fair amount of stocks in the news today. You had Nike a little bit lower. We covered this a little bit yesterday. They beat on earnings, beat on revenue. Really good. The company's just firing on all cylinders. This whole sell directly to the consumer is going really well. They've made this news kind of shift towards that. And Nike just got one negative thing that made it close below $100 today. Their gross margins, small miss on gross margins there. So it wasn't really that big of a deal. I think it's pretty fair that it was down basically 1% today, given how extended it's been in the short term. I think if the stock was in a sort of a sideways range or just making its way out of a range there, I don't think it would have been down at all, to be honest. Just not a bad earnings overall. Earnings overall up 35%. Revenue beat for the 9th straight quarter. If you happen to be following that. Revenue was up 13%. Looking good there. Sales all around the world were good. You had China up 23%. You had Europe up 14%. All in all, looking really good. So nothing negative to say, except maybe just it was a little overdone in the short term, which caused some people to say, you know what, you give me not a perfectly solid earnings report, and maybe I'll take some profit. So you see a little bit of that in the short term. BlackBerry, yep, this is that company. So the stock was higher today, up 12%. The real excitement today, if you ever follow BlackBerry and their earnings, Internet of Things. That's just their category now. It makes up over half of their total revenues. I believe it's close to 60% now. And so that part of their business did really well. 10% growth quarter over quarter, or from this time last year. So the stock was up about 12% today. Looking really good there. Nice little bottom there on BlackBerry. Winnebago, there you go. Winnebago hit new highs today. Yeah, these are the guys that make the RVs. They did really well. Good earnings. Overall, just reading through some of the earnings, the excitement came from their Class B RVs, if you're familiar with that. Also, the towables did well. Their CEO said early in the year, it might have been late last year, their goal was to get 10% market share of the RV industry. They're technically at 10.8, 10.9 right now, so mission accomplished in 2019 for what they were planning to do in 2020. So the goal was to do this next year. They're already ahead of schedule. A lot of people excited about that one there. Not too bad. Carnival Cruise, we use CCL here. If you happen to be one of our investors, you are going to see something a little bit different. We invest directly in Carnival Cruise, which is CUK. There you go. I just want to make sure it shows up on the screen there. Nonetheless, they're basically the same. What you're looking at here, Carnival Cruise, for the U.S.-based Carnival Cruise, you've got 7.6% gain on the upside today. It was a good earnings report. All was good. I have no real complaints there. They're doing great. Other than that crash, if you happen to, I don't know if you saw it on social media. Unfortunately, in Cozumel, I believe it was Cozumel, one of their ships was turning at the dock, and it just blasted the back of the other ship, the Carnival Glory, I believe was what it was. So not good, really, but didn't hurt the stock today. I mean, it was a great earnings report. The cruise is fine. They're going to, sort of just kind of cordon off that area and let the cruise go on as planned. So it'll be an interesting one, something to tell your kids or share with everybody if you happen to be on that cruise. Other than that, good earnings report. No real good frustrations there. Best day for this stock in over 10 years when it hit its highs today. It broke this downtrend. If you're able to, we could just draw like a real simple, you could see that, right? I don't have to draw, right? Broke through the downtrend in a more convincing way today. So from a technical perspective, you got traders happy there. From a fundamental perspective, the company's really starting to recover here. It's good news for them. Also in Europe, they had some struggles over there throughout the year. They shifted around. We're able to kind of navigate that. Navigate. And so all is good there. The only blemish today was that accident that got reported, but it wasn't bad. I think only one person was like barely hurt just from running away. So not too bad there. CarMax, a little bit lower on the day, down 6%. Overall, the earnings weren't bad. They just weren't as good as what everybody was expecting. They lowered their guidance. No, was it CarMax? Revenues basically as expected. They missed on earnings by 11 cents. Guidance was basically as expected, so really wasn't anything for them to get excited about. I found it was interesting. I read through the report. Average selling price for vehicles for them was up 2.2%. Average selling price for a car at CarMax, a used vehicle at CarMax in their retail division, was up to $20,710. That seemed high. I don't know why. It just seems high to me. But that's the average selling price of a car at CarMax. And so the stock a little bit lower today. Overall, it's been a great year for this one. So it's been a nice 50% gain. For it to pull back a little bit here, I don't think is a big deal. Netflix continuing to power ahead here, back into no man's land. We say no man's land because it's inside of a gap area. So they say that stocks like to fill their gaps and will always fill gaps. Well, now that we've cleared any kind of resistance to the overhead, whether it's the 200-day moving average or this prior high over here, now we're kind of in no man's land. You don't expect to see Netflix just tear off and go up to 360 again. I wouldn't. We own it, so I hope it does, but you just wouldn't expect to see that all in one shot. ConAgra, another 4% on the day from this really sloppy breakout, but they had great earnings yesterday. We talked about it in the closing beat, and today just a little bit of continuation. Not something you probably want to chase and get all excited about in this area, although it was hard to watch today if you missed out on it. But yeah, not too bad. Not too bad, looking good there. A couple other things. Facebook says the company has exposed the personal information of 267 million users. That's probably one of us watching right now, so hope you didn't have anything private on Facebook. You know what I mean? Just you got to keep yourself, just keep it straight. Keep your dough straight, keep your personal life straight. Don't be posting stuff you shouldn't post. You know better. Uber, I thought this was fascinating. As of yesterday, the founder of Uber, Travis Kalanick, he sold off a total of $2.5 billion worth of shares as he walks away, essentially. Holy cow. That's some dough right there. And lastly, you've got United States Steel moving lower by 10% on the day, lowered their guidance. They also lowered their dividend down to a penny, which I think it was at like 5 or 6 cents. They lowered it down to a penny. They're going to scale back their business and really get back to work trying to make the best of a pretty tough situation lately. Anyways, that's what you got there. 80% of the S&P 500 is above the 50-day moving average. If you think that number sounds high, it's because it is high. I haven't said 80% in about 5 months now. So it lets you also know we're getting a little extended, right? There's just too many stocks that are way up there and climbing. That'd be the highest of the week and then the highest, of course, of the last couple months. There were 77 new 52-week highs today. I'll mention a few of them if you're interested. Consumer products did well today. Campbell's Soup hit new 52-week highs, looking good. Kellogg's, that's them, the cereal guys. ConAgra, we just talked about that a minute ago. And Estee Lauder was another one in that sort of consumer space going on there. Royal Caribbean hit new highs as well on sympathy, well, not sympathy, but in sort of support from the Carnival report there, looking good. You have semiconductors, AMD, it seems like we've been mentioning this name every single day. Microchip hitting new highs as well, and Lam Research, LRCX is the ticker symbol, also moving higher. For those of you not interested in that category, you got Verizon. Look at that. There's that breakout. So the line was there from the other day when we talked about Verizon trying to get above the highs. Today's your first real convincing move that is officially breaking out. And Eli Lilly, look at that. That's called a blow off top right there. So Eli Lilly did hit new 52-week highs today, ran up early in the morning, and then people said, you know what? This is awesome. I'll take my profits. So you saw a lot of profit taking going into the weekend. I think that is very much okay. You would expect that what you see today has indicated a short-term top for Eli Lilly. Not my opinion, just a technical pattern there. Thought I'd point that out to you. All right, good. Oh, no new 52-week lows today, again. So everything looking nice and strong here. Now, let's take a look at the overall market from a fundamental perspective. Price to earnings ratio, right? The price of the stock relative to the earnings that you're paying for the stock. Now, rather than just rattle off a bunch of PE ratios to you of the different sectors, what we did is put together a quick chart to say, okay, for the individual sector, let's look at its current PE relative to its 10-year average, right? So if we were to take the current PE of, for example, consumer staples, where it's currently at relative to its 10-year range, well, let's see, is it near the top of the range, bottom of the range? Is it cheap? Is it expensive? So I thought that'd be a fun way to share the data with you today to make it very visually quick for you to understand whether something is near the top of its valuation or near the bottom of its valuation. Here we go. So on the chart here, you've got every single sector and then all of them combined. We'll start off to the left here with consumer staples, currently in the 85th, let's just call it 86th percentile of the highest of all in the last 10 years. Moving over to utilities, that's basically at the absolute highs in terms of valuation. You understand that because utilities have been up so much lately anyways. Materials would be officially the highest at, let's just call it 100%, 99.9 percentile up there at the top. Energy ranks down here at the bottom, 66.5%. We know that energy's been weak. We've been kind of pointing that out there. So from a fundamental perspective, it's in the sort of middle to upper range of where it's at valuation-wise. In blue, I put all of these together. So you can see that every sector in the S&P combined is currently trading at over its 90th percentile in terms of the 10-year range. So what's that tell you? Are you getting a discount on the S&P right now? Are you getting a discount in the sectors as a whole if you're a sector-based investor? Not really, unless you're looking at financials. We've said this numerous times over the last couple months that financials remain the least expensive from a fundamental perspective sector of the market, currently trading, let's call it halfway. So right at halfway. You're not paying too much, you're not paying too little. You're essentially, well, you know you're getting a discount relative to everything else. And hopefully that lands with you guys. I was just trying to think of a really simple way to show that. So there you go. There's all your different sectors there. Take a quick look, and we will move on to your questions. Oh, one more thing. A couple more things. Tomorrow we get Monday we get new home sales. Legg Mason's paying out 40 cents in dividends, and also Monday you will have Live Nation, Zebra, and a couple others moving into the S&P 500. So you've got that going on there. And if you happen to take a look through the S&P 500, one last stat. Come on, let's wrap it up for you. If you happen to look through the S&P 500, is there any stock in particular where 100% of all the analysts are positive? Like they all have buy ratings? Is there any one stock? You would think there'd be many stocks, but in fact, that's not the case. The only stock in the S&P that has 100% buy rating on it, which it's down on the year, by the way, but the only stock is Diamondback Energy, ticker symbol FANG. 100% of all the analysts that cover this one are currently bullish on it. And by the way, it has to bounce 30% for it to get to the average price target. So there's a lot of upside here from these analysts. The problem with that, you go, oh, well, great, every analyst is bullish, maybe I'll buy some of this stock. The problem with that is if even one analyst changes their mind, that's all, I mean, it's at 100% right now. Everybody's bullish. So it can't get any better in terms of them being more bullish. Everybody's dove in. So it makes it a little difficult. If two or three of them say, oh, I'm just going to back down, it's a hold now for me, or it's a sell, you would expect to see some selling pressure. So it's not like you say, oh, everybody's over here and they're bullish, I should be bullish too. Those tend to see little smackdowns when one analyst changes his mind, especially if they both have, if a bunch of them happen to do it at the same time. But I just thought I'd point that out to you. Hopefully that's helpful. I'll do my best here, try to answer some questions if I can. And we'll see what we can do. All right. I don't see. I see what you're saying. Oh yeah, Tesla fans. Yeah, Tesla fans are going to be really excited about that one. Poked to new highs there. You notice that it wasn't as strong today. You got to imagine people in there saying, "I'm going to take some profits there." Because it's had a great run. You can't argue with that. It's had a great run. If you're a short-term investor, you've likely already taken your profits. If you're a long-term investor, do you really want to buy more here? Doesn't that kind of make you a little bit nervous there? Maybe. Sold off some of your Tesla shares. Cool. Yep. I can't blame you. Anybody that says they took some profits on Tesla, you just That's like Eli Lilly, right? If you happen to own that one and that one did well, great, enjoy it. That's good. Do you think buying Lennar options would be a good call? They have their earnings on the 7th. No, buying options ahead of earnings is always very costly. It's just going to cost you more, right? If you want to take a shot and you want to be on the opposite side of that trade, there's a little money to make there maybe if you're not horribly wrong. But that's up to you. Yep. Also, Lennar is probably not known for being the most volatile of earnings plays there. I take it you believe this thing's going to move quite a bit higher. Not a bad day today, by the way. Is Boeing undervalued? Boeing's looking for news here. I think the longer Boeing doesn't get any good news or any sign of what's to be expected in terms of getting those planes back in the air, you have nobody that says, okay, I'll take a shot, right? I'll take a gamble. That's a tough one there, I think, for a while. Yep. Eric's happy with us here at Jazz. I'm happy you're with us, man. Thanks. I appreciate it. So Disney's been up for... You like Disney? Disney hasn't, you're saying Disney hasn't been up for 27 days? Oh, Disney's pretty much flat right now. You're hoping for Disney to pull back. I don't blame you. Any pullback in there, you'd think that people would expect that to be buyable, which is probably why you don't see much in the way of pullbacks, because anybody that owns the stock's like, I'm going to wait. I'm going to see how this Disney Plus thing goes. So you can kind of understand why it's a little bit quiet. Yep. Thoughts on Etsy? That's a tough one. Try to pick the bottom on that one, are you? I don't see any reason why I would think you have to go diving in and betting on the bottom. This would be one that falls into that category. I've done a video on it way in the past about buying bottoms. If you're going to do that, this is one that I would let bounce first, see the momentum change from a media perspective, see the momentum change volume-wise, and then maybe consider it. We'll see. We're taking a few days off next week. We'll be here Monday, but Tuesday and Wednesday, it'd be no closing beat. And then the following week, Tuesday and Wednesday, no closing beat. Yeah, there you go. You like Intel for the long term? Yeah, the semiconductors have done well here. They've got a lot of momentum since the sort of at least some of the confirmation of the trade deal there, or at least the positive sentiment of trade making progress there. So yeah, not bad. Intel, kind of like a staple for a long-term portfolio. Yep. I have a hard time with that Etsy one, yeah. You bought CarMax options before earnings? That'll happen. Don't be a buyer of options ahead of earnings. It's a very, you got to be so perfectly correct. It's a very difficult one there. Yep. You like the idea of more videos of scenarios for retirement. If you're X age, have X amount of retirement, you need to save X amount. Oh, I gotcha. Yeah, those are fun to do. I don't mind. There was one I was going to do. We have a customer, 52. So I was thinking about doing one for them because maybe we could work that in there for you. I like it. I like it. You speculating that that Best Buy is going to get bought out? Who's going to buy Best Buy? Who do you think would buy them? All right. Other than that, I think I've pretty much covered it for the day here. I'll wish you guys a good weekend. There's not much else for me to say. We got a sort of a light week next week. We'll start on Monday. We'll do the best we can to cover all this great stuff for you. I'll wish you the great rest of your day and weekend and everything. Be safe out there. We'll see you Monday. Thank you so much for watching, and adios.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.